Hi folks, and welcome back to Meaningful Money. Came back at Merry Maidens, just firing off a quick video really, because about time I put one up. And the reason why I've been a little bit slack over the last week or so is because I'm doing a lot of work ready for episode 150, which is next time. But more about why I've been taking a lot of time preparing for that. More about that next time. So this is episode 149, and I thought I'd do a response to... Let's not do that. That's a horrible post. A response to a video which is doing the rounds. It's had well over 1 million views on YouTube in just one of its incarnations, and that was a BBC interview with a trader called Alessio Tastani. It's caused huge ruckus because of some of the things that he said. Very provocative points about what's happening with the markets and things like that. So I thought I'd do a response. I don't imagine that I'll get anything like 1 million views of this, but you never know. Perhaps I'll put it as a video response to the guy. Perhaps not quite so many sound bites in this one, but I shall do my best. So as ever, before I get into it, I must thank my good friends at 7 Investment Management down here in the bottom right. They sponsor Meaningful Money, and as ever, I'm incredibly grateful for them, to them for doing so. So Alessio Tastani. Funny, his last name sounds like it's, the Italian for testicles, because that's pretty much what he spoke, a load of bollocks, if you'll forgive me. So he made lots of cracking sound bites, really provocative stuff. I thought I'd just answer a couple of them. The first one, he said the markets are ruled by fear, and a little later on he said the markets are toast. So in other words, it's all over. Now, firstly, the markets are ruled by fear. That's not true. They are, though, governed to a large extent by sentiment. Look back to episode 31, which was shot on this very spot, actually, where I talked about sentiment. Do you remember the stick? Yeah, sentiment plays a big part. Fundamentals play a big part. So the value of a share, say, will have a large part to do with the value of the company, the assets it has, the income it's producing, the dividend stream. But a great deal of it is also about sentiment, how investors think that company is going to do in the future. Never mind its current position, what will it do in the future? Is the share price likely to increase? If so, I'll buy it now. If it's going to decrease, I may sell it now or perhaps short it. Emotion doesn't equal fear, though. Positive emotions can lead people to buy the market. So the markets, I don't believe, are toast, and they are not ruled by fear. They are governed to a large extent, but not exclusively, by sentiment. Second thing he said, one of the other things he said, was institutional investors don't buy the rescue plan. Now, by that, he means the sort of Eurozone rescue plan, which has been voted on by the German Parliament today, essentially that they will bolster their part of it to make the full amount available to Greece in particular. I mean, that's gone through by a massive majority today. But this claim, institutional investors don't buy the rescue plan. Well, institutional investors usually invest for the long term. It depends what this guy Tastani meant by institutional investors. If he means traders, on the stock market, then that may be true. They will short the market, they will perhaps deal in shorter term bets. But what I think institutional investors is pension funds, university endowment funds, tens of millions, tens of billions of pounds being invested. These people do not invest in short term. They have long-term investment goals. So whether or not these institutional investors buy the rescue plan or not doesn't really, I don't think, make that much of a difference, because they will invest for the long term. Investing, remember, is not trading. I might even make that the title of this video, actually. The guy that was talking to the BBC was a trader. He's there to make money short term. You are not traders. If you're watching this, you are investors, and so you're in it for the long term. And so the short-term fluctuations, while they can be scary, you need to broaden your window of horizon, the sort of window that you're looking at your investments over. The longer, the better, because the less volatile it looks over time. So remember, long versus short-term. This guy talking was a short-term trader. Doubtless he would benefit from markets taking a plunge, which might be why he was trying to talk them down. Another thing he said was, the market is toast. I alluded to that earlier. The stock market is finished, he said. This is utter nonsense, okay? as long as there are people willing to buy and sell things, there will be a market for it. That's been around for millennia. I don't see that changing anytime soon. It's the sort of you know, provocative, scary, sensationalist comment that the BBC seems to revel in at the moment. Not just the BBC, but many media outlets. So just don't be scared by that. I can't see the stock market going anywhere. It might be volatile, but it certainly isn't going to disappear. He said finally, in 12 months, the savings of millions will vanish. This is another nonsense statement. Money does not disappear, it simply moves. So yes, shares may, you know, plunge. The price of shares may plunge, but people who sell shares have to put the money they realise into something else. So maybe that'll be government bonds or corporate bonds or whatever. So, you know, money doesn't move. Money doesn't disappear, rather, it moves. And so if you've got a broad asset allocation strategy, spread your money around, then you don't need to worry about one asset class plummeting. So the purpose of this really is to try and sort of diffuse the sensation about this guy who clearly shocked the interviewers on the BBC, who equally clearly didn't have the first clue what they were talking about, and just to sort of refute it really. So don't worry, this video is making the rounds. I had it on email last night. Don't worry about it, instead let common sense prevail. It's just sound bites, sensational journalism, which we're seeing a lot at the moment. It sometimes feels like we're talking ourselves back into a recession or into a stock market crash. You know, the German vote was positive today. US growth figures were revised upwards today. It ain't all bad. It's not brilliant, but it's certainly not all bad. So I hope that's helpful. Fire any questions at me by all means. Next time is 150, another little milestone, not quite so big as the 100th, but a nice announcement to make then. So thank you for watching, goodbye from Merry Maidens, and I'll see you next time.